Time to see what's on the radar with Ryan Bushell now. We'll get his thoughts. He's the CEO and portfolio manager at Newhaven Asset Management. And Ryan, thanks for joining us. And let's talk a little bit Pembina. You're liking that right now. What's got your eye?
Yeah, so it's not performing in line with peers. Clearly, TC and Enbridge are larger and get more of that kind of flow of funds from faster money players, and we've seen that play out. Pembina, they just released results. The results I thought were quite good. They have a diverse set of upcoming growth projects, Cedar LNG, potential on the data center side. I do think there will be one built in Alberta. I'm not saying there won't be any, but and Pembina seems to be at the forefront of that. Combined with increasing natural gas volumes for a number of projects, including their own in Western Canada, and more gas flowing through their existing infrastructure and their oil infrastructure. There's talk of growth there for the first time in years with the new sort of change in the government. So to me, it looks like everything looks pretty good for the company on a 5-year basis, let's say. And so you collect a 5% yield, and it's sort of middle lower end of its recent range.
And any concerns about headwinds?
I don't see a ton, frankly. Even commodity price related, it's not so much price that this company deals in, it's volume. So, you can say maybe Cedar LNG has issues or people are worried about being over budget. There is a headwind in terms of potentially KKR selling their stake in the joint venture Pembina Gas Infrastructure, which they worked on alongside Pembina, that they may have to buy that. But as we saw with AltaGas this week, they did an equity issue, said, guess what, we're going to keep the 10% stake in Mountain Valley Pipeline. Stock initially sold off, and it's been quite strong the last few days as there's been follow-through buying after the equity issue. So I think you could see a similar pattern with Pembina once actually that gets announced one way or the other. Okay.
ARC Resources, next up.
Yeah, so some production issues for them with a specific project, Hitachi, and that's, analysts are now rejigging their numbers. So on a short-term basis, yes, there's some pain there. I think you're seeing it finally washing out here. And what we think is you're seeing two things. You're seeing oil sands companies, CNQ, Suncor, Cenovus, and Imperial Oil, all talking about growth projects and we're not talking millions of barrels a day, but 100,000 here, 200,000 there. They're all heavy SAGD projects that are going to require condensate for diluent. So the condensate market looks really strong for ARC for the foreseeable future. And then on the gas side, yes, they're having these production issues. These are complex geological formations. Eventually, I think they will get it figured out. They've had a pretty good track record. And going forward, I think we see a more supportive gas price environment, which they're not getting any credit for either. So, stock had a great run up above 30. It's now back in the low 20s, mid to low 20s, and I think for long-term patient investors, we'd be putting some away for our clients. So maybe you want to as well.
And you said production's going up in a lot of locations. Any concerns that could end? What might fuel that?
So again, we need to see some egress built in terms of transportation out of Canada. We have it for now. We have excess capacity. And there are some smaller kind of brownfield projects. I'm not a big believer that we're going to see 1 million barrels a day greenfield project built in the next decade or anything like that. But I do think there are small incremental wins for, Trans Mountain has talked about adding capacity. Enbridge has talked about adding capacity on the main line. They had successful open seasons in terms of expressions of interest. So I think you will see just steady growth there. And the big thing we're watching is how does U.S. shale perform into this? Does U.S. shale start to roll over at these prices? Is the flywheel of high increasing wells coming on that'll decline really quickly, can they keep backfilling those decline rates? And that's something to be determined.
All right, sounds like reasonable expectations. Algonquin Power is the third one you're
on. So a company that everybody's loved to hate for quite a while, but don't look now, but it's starting to perk up. Analysts are warming up to the story. You're seeing people talk about, guess what, this is a pure play utility and it trades at a 5-turn discount to peers, meaning 5 multiple points lower. Its PE is about 13, 14, and others are 19, 20. So potential for a pretty good size re-rate. Management, I talked about this in some of the notes I sent. A lot of people will sell these stocks and they'll never look back at them. We try to be patient with a company like this because if it has long-term assets, one of the best lessons I ever learned from my former mentor is if the assets are good, the management's temporary and what they're going through is temporary. And necessity is the mother of invention. And so going through a hard time for a company that has long-term assets, especially if it gets killed like this one has, or AltaGas did in the past, or Manulife, or a number of others, you typically see good returns coming out of that. So if you hold your position and add to it and compound the dividend and reinvest it back in, it's not the prettiest way to make money, but it is a pretty solid way to compound and return for clients, and that's what we've done on a few occasions.
And any concerns about that discount as to why?
Yeah, so I mean, they lost trust. The previous management team lost trust. They were forced to completely rejig their strategy, sold off all the renewable assets. They were too far afield with too many projects. Now it's more concentrated. There's no, and it was also at a time where the renewables companies, had this big run in 21, 22, and then came off sort of middle 22, and until today, where actually renewables companies have been some of the best performers year to date, and so that cycle also affected them. But I think now you're looking at a situation where there isn't a lot of downside left, and there's still some low-hanging fruit, filing rate cases, getting the assets to perform better, where people will start to get back on board, and we're already seeing it. So.
Okay.